All right, greetings everybody. Welcome back. Happy Wednesday. Hope everybody's having a great day. Welcome to another weekly presentation. This is one of our times where we're going to go down a story lane. We're going to talk about the history of some currencies, obviously something of importance to us because a lot of us here do trade currencies. Whether you're a Forex trader or a futures trader, currency is something that is available to you. Obviously, you can trade Forex futures. You can trade regular Forex or obviously spot options, but the like is widely spread. So that's what we'll be talking about today. In one very in particular currency, it will be the Aussie. But without further ado, we're going to go ahead and dive through the disclaimers really quickly, and then we will be on our way to the juicy material that follows. So let's get on into it, shall we? First one and those thereafter, once again, just going to leave these on screen for just a moment. So please take a moment to read on through them. If you already know them by heart, not a single word of them has changed since the very first time we all began meeting together. So if you already know them, well, then, hey, I guess you don't need to be too concerned with them. But nonetheless, we're required to do it. So here they are. I personally like to use this time to get my coffee in. So that's exactly what I'm doing. But nonetheless, if you've never met me before, well, greetings. Let me be the first to welcome you. My name is Chris. I'm a trader and presenter here at Earn to Trade, and every week I like to bring these presentations to you guys. It's something fun, something informative, and something brain stimulating. At least that's my hope, to bring you something to just kind of make you think about something. Maybe you say, maybe you learn something new, but something to keep your brain from being stagnant. We want you to always be taking in new information, especially stuff relative to trading, even if it's not an exact strategy, or which we do cover those as well, obviously. Go through a little bit of everything here, but always trying to bring you something new. Let's go ahead and move on to the next disclaimer here. There we are. All righty. Moving along. Moving forward. Embracing every sip of the coffee while I can before I get into the deep speaking territory. And this will be the last one. I think we've made good time here. Have to give everyone a fair amount of time. For those of you that, obviously just love to read disclaimers. Just a joke. Just a joke. Even jokes that aren't funny are still jokes, right? Well, in other news, Chris has died while choking on coffee, going through the disclaimers. That's an interesting event. Let me mute the microphone here. All right. Well, that was interesting. Keep everybody on their toes. That was look all at all intended. That might make me sound a little bit different, but I was never very good at singing anyway, so I don't think anyone's too concerned. And now I have the hiccups. That's wonderful. So, word of caution, we should have a disclaimer in here. Make sure you drink your coffee slower than I do. So let's go ahead and get back to the title screen. Oh, this is going to be fun. Oh my good golly gosh. Every day is a new adventure, right, folks? Today we're going to be talking about the Aussie. All right, it is Wednesday, and once again, we are going to be working our way through things. And if you're just joining me, I just about drowned myself in coffee, and I now have the hiccups, and that's where I'm at. So hopefully you're having a good day just like me. It's all it's all in good spirits. But anywho, we are going to be diving into the world of the Aussie. Now, I will switch on over to some charts here so we have a better backdrop than just simply the title screen. And what we're currently looking at the moment, at least what I have open, is the Australian dollar futures. So if you're looking for this, this is going to be 6A on your ticker symbol. And if you want to, obviously throw it up on the FinMark platform and you are very new, it is literally just going to be up here in the top left. It's actually the very first currency that's listed. So on our platform anyway, okay? Not speaking for anyone else's, but if you don't know what it is, once again, it is simply just 6A. You're just going to type your 6A in with a slash, of course, and you're going to find your Australian dollar futures. And this is obviously relative to the Australian dollar, relative to the value of the US dollar. And here we have a 15-minute chart where we see the market bouncing around. And one thing to just point off right off the bat that is quite nice about the Australian dollar futures that you may already be seeing, some of my avid trader eyes out there might be noticing, that we actually have some rather liquid market activity going on. We have some predictable activity. We have some reused areas of highs. This is important to us as traders, obviously. We have a nice area that was previously resistance here that we broke through and then used again as support over here. And this is all in a very relatively recent period of time. So we take a look here. This was only about a couple hours ago where we found a nice little bounce here off of this area of support, where just hours before that, we were finding resistance underneath it many times over before blasting through, finding all kinds of volume and doing all that good stuff. So point is, the Australian dollar, this is a pair that is definitely worth taking a look at if you don't know much about it. Now, hopefully, you are going to be a little bit interested after we work our way out of the door here. Or if you're not, it's not going to hurt my feelings either way, but you will be a little bit more informed at the very least. So we're going to start with it way back in time. Let's work our way forward because left to right is the order of events. Excuse me. Still fighting off a little bit of these coffee drowning attack here. But anyway, so if we work our way back, we'll start back somewhere around 1788, right? So hopefully before some of everyone here has been born. Once again, that's just a joke. And as we move along with the Australian currency itself, we saw the first colony in New South Wales in 1788, okay? That obviously is in Australia present day. And because of that, there was a need for a currency. So in 1788, there was a need for a currency in New South Wales, okay? Convicts received no wages, and for those of you that don't know, Australia was a land of convicts. It makes it quite fun, it's where all of their great humor comes from, if you know any Australians, and maybe you know what I'm talking about. But nonetheless, so we have convicts that received no wages because they were sent there away from British colonies and other areas as well. And they needed a currency. They had no way to receive any type of payment or anything else. So there was only a small quantity of English and foreign coins that were brought with the first fleet, okay? So they were using English currency initially, but there wasn't a lot of it, and there was more people than there were coins. So most of the dealings in the first few years consisted of bartering, with rum being the main means of exchange. Probably not an issue for many of us, by the way it sounds, but it was for them back then. So handwritten notes of credit issued by government officials and backed by the English Treasury were a common form of currency, but these were subject to counterfeiting and devaluation as a result. And the earliest currency that was used, obviously, was English money, and then also the Spanish dollar, which is a little known fact that some people kind of neglected in the history aisle. But because of the shortage of English money and to prevent the Spanish dollars being taken back on the ships, there was a man by the name of Governor Macari, had these little things they called center cuts that they cut out, and they became known as holy dollars. Okay, and when these dollars were created, they were really, you can say that it solved the problem at the time, but it was nothing overly futuristic. Now, in 1813, when they had, the New South Wales of 1813, they stamped this on the currency. So in 1813, the currency literally said New South Wales 1813. Kind of exciting, right? But really not unlike today's currency, where if you take a quarter, or really most any currency in the world, that actually has a date that it was minted. So they were, began doing this in the 1800s in Australia as well. Nothing really out of the line there. And then on the opposite side of the coins, they would have something like 5 shillings, for example, on the reverse side. Okay. The dump, quote unquote, had New South Wales 1813 stamped on and cleaned and stamped on their cleaned and smooth surface. As I slowly fight off my coffee cough, I apologize. And 15 pence on the reverse side. So once again, that was the dump, also known as the 15 pence. Now in 1817, the Bank of New South Wales was established, and the first issue of banknotes comprised 5 shillings, 10 shillings, £1, and £5, as well as paper tokens for 1 shilling, 1 shilling and 6 pence, 2 shillings, and 2 shillings and 6 pence. In 1825, the British government imposed the sterling standard, though, throughout its empire, and English coins were then minted in Australia. And as we continue working forward, once again, we're not going to stay too far in this distant past. We're just giving you a fun little introduction here. In 1901, following Federation, the British silver and bronze coins continued to use, but in 1910, Australian Commonwealth silver coins were introduced. In 1911, bronze pennies and half pennies were introduced. And in 1913, the first series of Australian notes were issued based on the old British sterling system. Okay, so that's a little bit of an old history starting back in 1788 as we worked our way to finally finding Australian currency in the 1900s. And now we're going to start progressing our way a little bit more recent, but we still have some more fun history facts. And we're going to talk about various things, like basically some of the economy symbolic events that occur behind the Australian dollar, things that are relevant to you and your trading today, and drivers of the Australian dollar in and of itself, because these are things as investors that find value to us. But anywho, so as we kind of work our way back, we know that the Australian dollar is available in the form of coins and banknotes, all right? And the Australian currency, excuse me, was first decided to be named the Royal in February 14th of 1966. So we have now worked our way even closer to present day. So in 1966, it was decided to be named the Royal on February 14th, and appropriately, it is now February 12th. We are about to reach an anniversary, all right, on Valentine's Day as well, on top of that. But nonetheless, this name itself proved very unpopular, unfortunately, and it was finally named the dollar. So if you want to celebrate the anniversary, you absolutely may, but it is obviously in today's world known as the dollar. And a fun fact about that, there's actually some names that were thrown about by the locals, especially, that were really never stuck to fully, but some obviously were. And some of those names would be Oz, or Roo, or Kanga. And Royal was the one that was finally chosen, obviously, but once again changed again finally into the dollar. But what a name. The Oz, the Roo, or the Kanga. Now, obviously, the Oz is where the phrase Aussie does, in fact, stem from. And that's what we all call it today, at least the vast majority of us do. We refer to it as the Aussie. Now, a lot of us don't think of Oz as O-Z, which is how it was spelled. It looked like this. They called it the Oz. And in fact, a lot of us really think of it today like this, which if you pronounce them, at least with an English pronunciation here, it does in fact sound the same. So the Oz and the Aussie, right? The Oz and the Aussie, we're just adding an E to the end of that Oz, Aussie, right? But pretty interesting little piece of fun fact information there for you. But nonetheless, the Australians did use the abbreviated dollar sign, obviously, and we saw things like an A dollar sign to just kind of shorten and abbreviate when people were talking about the Australian dollar after it did become the, once again, Australian dollar instead of just the royal in and of itself. Now, as we move along, we just talked about how the dollar itself came into fruition after the royal was found to be quite unpopular with the Australian people. And then and that was in 1966. And also in 1966, coins were introduced, and they were in the form of 1, 2, 5, 10, and 20, as well as 50-cent coins. Okay, so once again, 1, 2, 5, 10, 20, and 50-cent coins. Very similar to US currency, with the exception of, obviously, the 20-cent piece. In the US, what do we have? We have a quarter, which is a 25-cent piece. But all of the Australian coins have Queen Elizabeth II's portrait on the side, as she was the reigning queen at the time. Now, in 1988, the Reserve Bank of Australia introduced the first Polymer banknote. Okay, and these were coded by the color of which they were. So a fun little color coding. And this is one of the things that you see in many different countries, but unfortunately, really in the US, a lot of our money, it just recently started gaining some actual color, but for the vast majority of it, our money is quite boring in the US, at least my little opinion of it. But nonetheless, so we started seeing a color coding. $5 was pink, right? 5 Australian dollars was pink. 10 Australian dollars was blue, 20 Australian dollars was red, and 50 Australian dollars was yellow, with the big dollar bill being the $100 bill, and that was green, okay? So one more symbolism there, I suppose, or not symbolism, but something similar in nature to what our $100 bill here in the US is. And in 1973, as we continue working our way forward, the Australian dollar was valued at the equivalent of 1.487, so on, forth dollars of the US. So basically, we'll round that up and we'll call it in 1973, one Australian dollar was valued at 1.5 US dollars, okay? Now, in the following years, the fluctuation was limited to this range where we saw the dollar go from like 1.48 to 1.49. So there wasn't a huge amount of fluctuation, but there was fluctuation nonetheless. The stability in the currency's fluctuation compared to the US dollar made it more popular among traders at the time. The Australian dollar itself hit its record-breaking value in July of 2011, so getting very close to present day in relatively speaking. Now, during this time in 2011, it was traded at 1.108 against the dollar. So quite a lot lower than obviously in the initial opening phases there, 1.108. So almost equivalent to the dollar, and definitely a lot closer to the current day state of the euro. Right now, the Australian economy is very stable compared to the rest of the other countries in the world, relatively speaking. In the past years, its trade was only dependent on agriculture and raw materials and minerals. Therefore, its value varied in the business cycle. Now, the currency is now recommended by many economists across the world for trading because of relative stability. Lack of intervention of the central bank is one of the major factors of its success in the trading market. This is things, once again, that us as traders, this is valuable information for us, or just worth being aware of if we're interested in trading with the Australian dollar, that is. But nonetheless, the fact that they're not constantly intervening with the central bank, that's good news for us because we're really cautious about currencies that are constantly receiving heavy shifts as a result of major economic changes, right? It causes a lot of volatility and makes it quite difficult and dangerous for us as traders, okay? So this does provide a simpler method of trading rather than going through a long process with the bank in and of itself. Also, as well as a result of lack of intervention by the central bank. So that's another positive aspect. Now, another important factor is the stability of the Australian government and the economy. The Australian economy is very strongly developed. Their market economy has a GDP somewhere around 1.23 trillion US dollars. Okay, that's 1.23 trillion US dollars. The main emphasis of the country is on the exports, which is obviously a sign of a strong economy. Thus, the economy is increasing rapidly. In the past decade, the growth rate of the economy was estimated to be somewhere around 3.4% a year, which is quite a lot by today's standards. This country has the lowest debt compared to the rest of the world. This little old country that we know as Australia. It is a very powerful situation to be in when your debt situation is low relative to everyone else, right? This ranks it high in the trading market because, once again, as traders, what do? We favor countries that are strong, are showing signs of good growth, have liquid economies with little intervention, and have a strong GDP with, once again, relatively low debt. These are all things that are appealing to us as traders and signs of a strong currency, okay? Now, as we move along, there are other valuable pieces of information in that GDP statistic column that I wanted to share with you. And one of those is that it ranked very high as 19th as the large in regards to being over throughout the entire world. Australia was the 19th on the list as the largest importer and exporter on average. So the main trading partners of Australia are China, Japan, Korea, India, and the US. Okay, so once again, just one more time if you are interested, because this is once again also very important. And why do we care about this as traders? Well, once again, if we're trading what we're seeing on screen, Australian dollar futures, and the line once again that you see on screen if you're jumping in late, that was just something we talked about in the beginning, kind of highlighting some of the stability that has been seen and some of the regularity that is shown with the Australian dollar futures, or just the Australian dollar in general, whether it's spot options or the future variation, obviously. It's very, very evident that the market likes to reuse areas of importance, and that makes it all the more predictable for us as traders, or theoretically does. But Australia likes China, Japan, Korea, India, and the US. Why do they like them? Because those are the top countries that Australia has trading relationships with. Once again, China, Japan, Korea, India, and the US. And the reason why we want to take note of this, and I kind of slow down when we talk about this, is because they all have interconnected economies. So this means if we're paying attention or trying to forecast or long-term invest in the Australian dollar or Australian dollar futures, and there's something going on with one of its main trading counterparts, okay, maybe one of its a country that it largely exports to, maybe a country that it largely imports from, out of China, Japan, Korea, India, or the US, okay? Let's just say China and the US go to war, okay? God forbid, that would not be good for anybody at all. We don't want that to happen whatsoever. But if it were to happen, it would absolutely have a tremendous impact. Excuse me. Still slowly drowning over here by the coffee attack on the beginning of the section here. But it would have a massive impact on the economy going on in the U.S., and you absolutely would expect to see massive fluctuations in the economy, the GDP, as well as just valuations of the currency in and of itself, even if it wasn't relative to China or the U.S. So when we say in the Forex world, it's the AUD USD, right? It's the AUD USD. That's the Australian dollar to the US dollar. So we would have a crazy fluctuation if hypothetically the US and China went to war in a physical sense, okay? We could already argue that we are currently involved with a trade war, which once again, but we're not going to go too deep into that. But nonetheless, so as we we would see obviously valuation changes, relatively speaking, in the US dollar, which would compound in the exchange with the Aussie dollar. Okay, so the Australian dollar. But the Australian dollar itself, if we were to relate the Australian dollar itself to, say, the Aussie yen, okay, something like that, we would see massive changes in the economy in and of itself and the valuation of the Australian currency, even if it wasn't a direct cross with the U.S., for example, is the point that I'm trying to make there. But nonetheless, point is, China, Japan, Korea, India, and the U.S. are the ones that we want to pay attention to while investigating and future forecasting economy changes and valuation changes of the Australian dollar currency, because they are the strongest trading partners of Australia. Now, that is a little bit of a fun fact information. And one of the things that we were going to dive into as well, we were going to talk about a few different things that I decided here. And one of which I was thinking about, those of you that know, the Bretton Woods Agreement actually is something that heavily affected the I didn't want to dive too deep into this, but I'm feeling like there's no way for me to simply sum this up. So put your pants on, folks. Here we go. So I believe it was until 1971, the Australian dollar was at a fixed exchange rate. Okay. And this was initially with the pound sterling before it was being pegged against the US dollar, which happened in 1946. And we didn't mention that earlier, but we're going to need to. Okay. So after the Bretton Woods system broke down, Australia switched. And the Bretton Woods system obviously is referring back to what was happening prior to 1971. So after the Bretton Woods system broke down, Australia switched to a fluctuating exchange rate against the US as it stands today, as what we call a floating currency. And this is what then caused it to become one of the 5 most traded currencies in the world. Or not, we wouldn't say shouldn't cause it, I shouldn't say it that way, but it did in fact at this point become one of the 5 most traded currencies in the world. And it's often known as the commodities currency because of the things that we talked about previously, with a large portion of Australia's economy being based around natural resources that are exported by Australia. So when it was first introduced in 1966, the Australian dollar was at a fixed exchange rate under what was called the Bretton Woods system, which was established after World War II and governed almost all international currency exchange rates. If you don't know, now you know. The exchange rate used the US dollar as the standard, yet the Aussie was pegged to the pound sterling, which once again is just the pound, at approximately the value of 1 gram of gold. Now, during that subsequent peg to the US dollar in the 70s, the Australian dollar reached its highest value relative to the US currency. The peg was adjusted to somewhere around 1.48-ish, roughly, in 1973. And then on the 7th and 10th of December of that year, the Aussie then reached the highest point that we already talked about of 1.488. And this rise in value was partially attributed to a weakening U.S. economy as it struggled against the effects of the oil crisis. Now, 10 years after that, in 1983, I believe it was in December, the Aussie was floated and its value determined by supply and demand on the international money markets. And for the next 2 decades, the Australian dollar fluctuated against the US dollar, reaching a high point of $0.881, and that's US dollars. Obviously, very important to clarify that. So it reached a high point of $0.881 US dollars, quite a lot lower than it initially began, in 1988, and it had a low of 0.477 US dollars in April of 2001. Now, there has been a lot of debate amongst analysts as to the causes of these swings in the value, especially during the period between 1985 and 1986. In the mid-80s, the value of the Aussie dropped as terms of trade dropped and the account deficit began to rise. Now, debates for the reason behind this are about really over the role of speculators accumulating Australian account deficits and swings in the terms of trade and monetary policies. But once again, this is something that you're going to hear arguments if you dive deeper into it. Now, one undeniable truth about the Australian dollar economy in and of itself is the value of it is still, like we said, considered to be extremely stable worldwide because of the strength in the exporting, because of the strength in all of those things. So Australian dollar is something that, once again, despite the change and moving away from the Bretton Woods Agreement, which once again was guaranteed valuation against the dollar that was agreed upon after World War II, the Australian dollar in and of itself is a undeniably strong currency, despite me saying and bringing up attention to the fact that the value of the Australian dollar against the US dollar has dropped. So just because we see a currency's value drop does not necessarily directly mean that the currency itself is in danger, in peril, or shouldn't be traded in and of itself. Okay. You know, if we just continue talking about the economy behind the Australian dollar, I really want to drive home the point that it is a very strong pair, because I don't want people to, view it as otherwise, because it absolutely is. It's actually one of my favorite currency pairs. When I first started off in the Forex world, gosh, it feels like an eternity ago, but it was something that I really enjoyed. I like the euro dollar. I'm, very cliche in that regard. I think everybody likes the euro dollar because of its liquidity, its stability, and its lack of insane moves relative to, some more volatile pairs. But the Australian dollar was always one that interested me. The Aussie dollar was once again, the Australian dollar, US dollar was something very, very interesting to me. There was moves in it that were large, but it would still exhibit, as we're seeing here. We would find large swings, but rather predictable swings at times. It was a liquid pair that had action, it had volume, and it allowed me to gain more pips. And then, once again, we're talking in the spot world. It allowed me to gain more distance than I would gain, for example, with the euro dollar. But it didn't really exhibit a lot of the same risk as some of those far off pairs that might have some extreme volatile swings. And that is something that I like personally, and maybe is interesting to you as a trader, maybe a reason that you might, be interested in further investigating it. But talking further about some of the driving factors of the economy behind the Australian dollar, there's a few different economic models that are designed to calculate the quote unquote right foreign exchange currency rate of the Australian dollar. And there's no such agreed upon true method besides which one is the exact right method of doing it in terms of valuing an economy in regards to the Australian economy, because there's a few different variables that change throughout. But traders, however, incorporate a much larger range of economic data into their trading decisions, as a lot of us tend to have speculative outlooks that we can find to give us value in an expectation that we're going to see a rise or a fall in the economy, because that's generally correlated to a rise or fall in the valuation of the currency. Now, a lot of major economic data includes the releases of GDP, retail sales, industrial production, inflation, and trade balances. These are all things that go into the valuation of the, economic view of the Australian economy. And these things come out at regular intervals that we all can look at if we so choose. They come out at regular intervals, and many brokers, as well as many financial sites and information sources, I'm not going to name any just to be safe, but some of the most common ones you've ever heard of that you would see on the television make this information quite freely available. So you can access this stuff really anywhere if you want to do your own diving. Now, something that's worth taking note of is the information on employment, interest rates, including scheduled meetings at the central bank, and daily news flow of things like natural disasters, elections, and new government policies. All of these things can have significant impacts on exchange rates, okay? So once again, if you're interested in trading the Australian dollar, it's not that these things are profoundly different in Australia as they are with other countries, because these things do impact exchange rates in the US, just like they do in Australia. But these are just obviously things that, once again, we want to pay attention to and are worth drawing note on. Now, with Australia, though, there are other factors that also need watching that we really don't see a ton of in other countries. Australia's economy being driven heavily by commodities means we want to pay attention to pay a lot of attention to, well, goodness gracious, we strongly want to pay attention to metals and grains, and reports on crop planting, weather, harvests, mine output, and metal prices, because all of these can heavily move the Australian dollar. Now, fortunately, all this data is not hard to find. There's something called the Australia's Bureau of Agriculture and Resource Economics and Sciences, which is abbreviated ABARES. So if you want to just remember it for short, just remember ABARES, okay? ABARES. Now, Bears produces regular reports that are freely available on the internet with a quick Google search. Now, along those lines, the strength of the Aussie dollar is closely tied to its exposure to Asia and the commodity cycle, as well as somewhat counter-cyclical positions relative to the currencies of other major currencies. Okay, the demand in China, India, and a little bit of a lesser extent, even Japan, for natural resources has pushed the Aussie dollar up in past cycles, only to fall later as those commodity demands wane. So, what does this mean to us as speculators in the currency market or the futures market, once again, based around the Australian dollar futures? That means we can pay attention to the cyclical increase, just like in the Northeast, we see the value or the demand. We see the demand for crude oil rise for heating because of cold weather in the Northeast in the US. And as we kind of, we just see all kinds of different demands rise as the weather patterns change. I'm not just talking crude oil. Obviously, we have all kinds of other things going. But as we see demands change, and can quite commonly expect that, because does the weather get colder in winter? Well, it does indeed. Does that mean more houses are going to need to be heated? Well, it does indeed. Or are there more people traveling during the summer because the weather is right? What is that going to cost? Well, what is it going to cost? It's going to cost what powers a car? Gas, and obviously, where does gas come from? Well, its long line comes down from crude oil itself. So there's a lot of different things here going into effect. Natural gas, obviously, different things that are incorporated that can be easily predicted when the demand's going to rise. And how does that affect price? Well, generally, we're going to see price rise, right? Well, these same concepts can be applied to the Australian dollar, which can lead to profit-making potential for us because we pay attention to Japan, we pay attention to India, we pay attention to, once again, Japan is, I'll keep that at the bottom of the list. It is heavily impacted by Japan, relatively speaking, but it's much lower than China and India and some of the other ones, obviously, that we talked about. But China and India are massively big effectors. If we pay attention to the economies that are going on there, not the economies, but the regular cyclical demand requests of the commodities that are coming out of Australia to Japan, to China, to India, based on weather patterns or just based on buying patterns, it is predictable potentially in nature to find when or anticipate when demand is going to be higher and when demand is going to be lower. And historically speaking, what does this mean for the Australian dollar? It means a rise when the demand is higher, and it means a fall when the demand is lower. So a lot of people get so heavily into the technical analysis that they forget about a lot of the fundamental stuff. So I was trying to bring a little bit of attention to that. If you pay attention to the countries that are buying a lot of products from the country that you are trying to, trade, speculate, or invest in, theoretically, then you are probably going to give yourself a very large piece of insight into when to expect that economy to rise and or fall, just due to being prepared for demand increases and demand decreases. It's just like a season and a tourist town, okay? Those of you that live in some type of tourist town, and a lot of towns experience some degree of tourism at some point during the year, unless you live maybe in the middle of nowhere in the central US or somewhere, so that just obviously doesn't, but many coastal towns, we'll use that as a better example, in the US experience large influxes in tourism where the population might triple in size during, a period of 3 to 4 months out of the year. That is something that happens because you have people travel to the coastal towns to escape a colder or more harsh weather elsewhere and spend a portion of their time in those coastal towns, even if it's just a temporary escape or if they're staying there for, the entirety of that 3, 4 months. But this is something that is very predictable, and it is something that businesses thrive on. And this concept applies absolutely to the Australian dollar economy as well, because once again, if you are paying attention to the buying patterns that are associated with the weather in places like India and China, then you have an anticipation of when to watch the value come up and the value go down. And sometimes that is all it takes for some type of a long-term investment. If we buy before those patterns go in, during the period where the patterns are falling off and the value is devalued, or the value of the Australian dollar is falling, we buy when it's low, we sell when it's high. That is the simplistic sense of investing long-term with the Australian dollar by just paying attention to the fundamentals and analyzing just the cyclical nature. And it is something that is quite steady in nature. It is something that sometimes, based on the weather, might come sooner, might come a little bit later, but it is something that is almost inevitable. Just like the sun rises and the sun sets, there will be an increase in demand, generally speaking, because of the weather, or a decrease in demand, speaking because of the weather. And the weather, when I say that, I'm talking about a time of year, not just because it's cloudy outside, but nonetheless. A little bit of fun facts about the Australian dollar and analyzing some of the economy and anticipating when that value is going to go up. Because at the end of the day, if we go that far back, if we understand what is causing an economy to rise, an economy to fall, what supports the economy, then we know what to look at and we know what to expect in the long term, the bigger picture with the currency. And that is pretty important information for us, because what are we doing when we're buying the Australian dollar, or we're doing Australian dollar futures? We're effectively, more or less, exchanging our money for their money. Okay. And we're looking to do it at a time when it's low, and we're looking to take it back at a time when it's high relative to our own. And it doesn't matter what country in the world that you're in. The concept and the theory applies. That is at the core exactly what trading is. That's what we're doing on every day. We're trading at one price and hoping to trade back at another price. And it's a period in a system where we're, as traders, we're supposed to be the masters of trade. We're supposed to be able to accurately, sometimes, hopefully, and more often than not, right, speculate when these values are going up and down, and give ourselves an opportunity to find some type of economic and profitable growth based on, previous analysis that gets us ahead of the general public. And to be honest, folks, it really isn't hard to be above the general public. Is trading easy work? Absolutely not. Trading is not easy work, but there are large advantages that we can gain as traders that put us ahead of the average traders. And by paying attention to some of this information and some of the relative, driving factors behind the economies of any countries that we're trading, in this case, Australia, you will be above 90% of traders just with that. You'll be above them just with that. Okay. That is something that is going to give you a big leading edge. Okay. It's still going to come down to your ability to invest to dictate how your results will go. But I am telling you how uncommon it is that I see traders pay attention to these types of things while investing, because people get so caught up in the day trading. They get so caught up in the very, very short intraday trading. They get very caught up with this scalping mentality, and sometimes it doesn't need to be as hard as people make it. It just, more or less, sometimes people just need a little bit more patience. But anywho, I digress. It has been a pleasure talking with all of you about the Australian dollar economy, about the Australian dollar fruition, going as far back as the 1700s, working our way forward, kind of briefly talking of a quick rundown on how things changed after the Bretton Woods Agreement and World War II, and talking about what drives the economy, how the notes were created, how we moved away from the British system. We covered quite a lot in that regard, and hopefully you're ready to kind of educate the wife or the kids now and sound a little bit, maybe a little bit more articulate about some things that are going on in the world. Maybe you can impress some people there, hopefully, if just a few of the little things that I share with you today stick. But at the very least, hopefully your brain's stimulated, and hopefully I gave you a little bit of entertainment. Nearly dying from my coffee this morning. I'm sorry about that. I desperately tried to get that mic muted before I really got bad there. But nonetheless, I survived. We survived together. I still feel like I've got a little bit of coffee up in my brain now, or perhaps just kind of sitting there in my lungs. Can't be good, but I'm still functioning. So if I make it to next Wednesday, you'll get to join me on another ride as we go down another topic. Now, next Wednesday obviously won't be a history lane in terms of talking about a currency. It won't be a currency spotlight because that was today, but we are always talking about something fun. So I do encourage you to join me back. And it is something that I enjoy doing to share with you guys. So once again, thanks for coming along with me on the journey. I am going to be closing us off here, but this has been a presentation. My name is Chris from Earn to Trade here, and I will see most of you, I'm sure, very soon. But if not, I'll see you on the next one, folks. Cheers, everyone. Have a great day. Have an excellent day trading, and clean out that market by Friday. Cheers, folks. Over and out.